All right, everyone. So we're going to jump right in here to a case study on Verb. This stock went up over 400% today, which is a huge move. This is super impressive. So I'm going to walk you through how this is able to happen and how I made my decisions when it came to entries, exits, and whether or not I would even trade it in the first place. All right. So step one each day for me is to try to find stocks like this that are moving. In fact, pretty much every single day, there are stocks that are breaking out of the norm and are doing something exceptional. And the reason they're usually doing that is because they have some type of news. So my process is to scan the market using this tool, and I'm searching the entire market for stocks that are gaining, that are moving up very quickly. And I sort this scanner by the leading percentage gainer. Now, by doing that, I was able to see very early this morning that Verb was in the number one position. And that was well before it was up 350%. Even when it was up just 20, 30%, as it was starting to move up the scanner, this little green arrow showed me that the stock was moving up the scanner. So I pay attention to that. So I click on the stock and I try to figure out, why is it moving up? The catalyst for Verb. This is a company it's a US company, and they put out a headline this morning that said Verb launches Facebook and Instagram social shopping technology integration. Okay, so it's got a headline. I mean, to be honest, when I'm looking at headlines, it's hard for me to really gauge how meaningful these are to the long-term profitability of the company. But what I pay attention to is the fact that, number one, the stock is moving up. So traders clearly are interested in it. And I'll say that Verb has, as of right now, just over 450 million shares of volume. It has a huge amount of volume. And that also is reflecting the genuine interest that traders have in trading the stock as it's moving higher. So step one is to find the stock moving. Step two then is to try to figure out why it's moving. Now, the reason this is my process is because there are literally thousands of stocks that you could choose to trade on any given day. And there are many companies that put out news headlines. Some of them put out news headlines almost every single day, but a lot of them don't result in the stock going up 400%. Most of them don't, in fact. So rather than look at all of the news headlines, I just look at the stocks that are actually moving. And then once I see that the stock is moving, I try to figure out why it's moving. So step one, look for stocks moving. Step two, check out the catalyst, try to understand why it's moving. Step three is to pull up the chart. So in the case of Verb, of course, one of the first things I noticed when it hit my scanner this morning was that it was a cheap stock. And if you know a thing or two about my strategy and the way I trade, you know that I actually don't like trading these lower priced stocks. And I'll get into the reasons why in a moment. But first, let's look at the daily chart. So one of the first things I do after looking at the scanner, when I look at the scanner, I'll see the name of the company, I'll see how much it's up today, and then I can check the price, I can see how much volume it has, and I can see the float, which is the number of shares available to trade. This is the level of supply. So when we have stocks like this one here, I even highlight that in the color because it's significant because it's such a small level of supply. Certainly contrasted to this stock with 500 million shares of supply. And I also look at the relative volume on the daily. This one had very high relative volume on the daily, which means the volume is much higher than average. So in the case of a lower price stock or a stock perhaps like Journ that has a 500 million share float, I won't even proceed to step two. I don't care what the news is on Journ. I'm not going to trade it with a float that big. I just know that it's not going to be something that's going to be easy to trade. But on Verb, despite the price, I did go ahead and check to see what the daily chart looked like and what the news was. So on the daily chart, what I noticed was that this stock had made a pretty epic move back here in September, but then proceeded to give it all back. Sold off all the way down to about 15 cents a share. And then this morning, boom, it's popping back up. So you'll notice a couple of lines on my chart. This is the 200 EMA. So EMA is an exponential moving average, and the 200 period is the most popular. And this dotted line is the 200 SMA. Both the 200 EMA and SMA are popular indicators that traders use on their charts, and they're widely considered respected levels of resistance when a stock is below it, coming back up, and considered support when a stock is above it, coming back down. So in this case, we did have some SMA resistance, but the EMA was still quite a ways away. Now, when it came to the intraday chart pattern, when I pulled up the chart, I saw the stock initially squeezed up on this first green candle right when the news came out at about 8:30. It pops up and it pulls back. So you have that first spike. And to be honest, that's probably generated by high frequency trading algorithms that read the news, saw Facebook and Instagram in the title or in the headline, and basically immediately initiated orders to buy the stock. They're just pressing the buy button like instantly. So that pops up and then you get a little bit of a pullback. And now this is the spot where retail traders are going to come in and are going to decide, is this something I want to buy or is this something I'm going to leave alone? So I'm going to pull up, let's see, those are my trading metrics. I'm actually going to pull up the chart on this, and we're going to get zoomed into the live chart because I can show you in more detail and walk you through my thought process. So as this pops up on the scan, the first thing that I'm thinking about is this is a cheap stock. It's just too cheap. So here's the issue for me. When I was getting started, I traded these stocks because I had a small account. And, this is what I felt like I could afford, 15, 20 cent stocks. However, I usually would lose money on them. I didn't make good money on them. And one of the challenges is that although, for instance, traditionally, you have this pop and this pullback, I would be buying this dip right here. This only went from about 20 cents a share to 26 cents. So that move right there is 6 cents a share. Now, while it's percentage-wise significant, as a stock goes from 20 cents to 26 cents, it's still only 6 cents a share. So if we get out the whiteboard here, 6 cents a share times 1,000 shares, well, you're talking about $60 of profit potential. And that would be $60 before commissions, if you had commissions with your broker. If you did 6 cents times 10,000 shares, you're talking about $600. Now, for reference, my daily goal is $5,000. And I achieve that fairly consistently when I'm trading stocks priced between 5 and 10. And that's because when I buy a stock at $5 and I sell it at $5.50, 10,000 shares is, 50 cents times 5,000. That's 50 cents times 10,000 shares is a $5,000 return. So I prefer this price range. Now, you might say, Ross, well, wait a second. 10,000 shares with $5 stock is a $50,000 position, whereas 10,000 shares of a 30-cent stock is only $3,000, right? We're talking about much different amounts of money. Now, some people think of trading in the sense of how much money I'm going to put into the trade. And they would say, maybe someone will say, I'll put $30,000 into my position no matter what. So when it comes to a 30-cent stock, they're doing 100,000 shares. And when it comes to a $3 stock, they're doing 10,000 shares. But when it comes to a $6 stock, they're doing 5,000 shares, and so on and so forth, so that they're always taking $30,000 positions, right? This is a really interesting way of trading that I've never been able to get on board with. And the reason is because 100,000 shares is going to be, unfortunately, a lot easier to take an unexpected loss on because of the way these stocks can suddenly drop. And just to exemplify what that looks like, there it is. Look at that drop. So this looked all fine and dandy. It started to pull away. And then right here, it drops like 30%. It's a big percent. It goes from 50 cents down to about 36 cents. So, it's a 14-cent drop. So if you took that with, if you were doing 100,000 shares of that, you're down $14,000. That's a huge amount to risk. Now, for me, the reality is on this type of pattern, I might still only want to risk roughly $1,000, maybe 1,500. So if I'm only willing to risk 1,500, I simply, well, I at most could maybe consider 10,000 shares. And that would have limited my drawdown on that kind of drop to about $1,400. But if I take 10,000 shares of a stock like this, it's very unlikely that I will get a quick $3,000 or $4,000 or $5,000 winner, because these types of stocks don't usually go up 20, 30, 40 cents very quickly. They grind slowly. And one of the reasons they do that is because when a stock is trading below $1 a share, stocks will trade down to the 1/100th of a penny. So that means this stock this morning was trading at, for instance, 28.15 by 28, that's an 8, 28.25. So we're trading down to the fraction of a penny. And what this actually means is because these stocks can trade down to the 100th of a penny, in order for a penny stock to go from 90 cents to $1, it's only 10 cents. But 10 cents times 100, it's actually 1,000 increments of potential price because of how it moves in these smaller increments. However, once a stock is over $1, they don't trade down to the 100th of a penny anymore. So in order for a stock to go from $1 to $1.10, it's 10 cents, and it's literally only 10 increments, 10 cents and 10 increments, because they don't trade down to 100th of a penny. As a result, stocks over $1 tend to move a lot faster from $1 to $2 than they'll ever move from 50 cents to $1. So generally my threshold is that I don't seriously consider these stocks until they get over $1 a share, because I know that in order to profit from them in these areas, I would need to buy 50 or 100,000 shares, but I'm still exposed to the risk of catching a panic flush. And if we get a panic flush and I need to unload a big position, I'm going to find that it's going to be very difficult to do that. I'm not going to get good fills on my orders. I'm going to get terrible fills. When you sell at the same time as everyone else, you don't get good fills on your orders. You fill at the bottom. So Verb pulls away here, and at about 8:48, it hits a high of 44 cents. It then pulls back and starts to curl back up again, up to about 50 cents. It pulls back and it moves up. Again, in terms of cents per share, we're talking about like a 10-cent range. So if you bought 10,000 shares here, you wouldn't have been up or down more than $500 for, 45 minutes. It's just more or less going, up or down within that very small range. So then here you see how we squeeze up to a high of 49 cents. And on this candle, we get this huge rejection right here. And I saw traders say, well, that just took me out. I just got wiped out, because they sized up thinking this was going to squeeze through the pre-market high, and it didn't. This gray area here is pre-market, which is begins at 4 a.m. and goes until 9:30. 9:30 is the opening bell. That's when the market officially opens. Realistically, you could trade pre-market or during regular trading hours, but there is a difference. During regular trading hours, you can use stop orders and market orders. During pre-market, you cannot use either. So the liquidity usually isn't quite as good. The volume, in other words, is a little lower pre-market, and then regular hours, the volume is higher. That's typically the case. But nonetheless, what happened here, I think, most likely is that someone who had been holding maybe for weeks or months, or maybe even just for a few hours, decided to dump a big position. And this was over 1 million shares of volume in these candles. So they could have dumped 1 million shares onto the market. And certainly they could have made $100,000 or maybe more, depending on where they were in from. But this is going to hurt anyone who's trying to trade this quickly and move in and out for small scalps. A scalp trade is when you're taking a quick profit. You're getting in, you're getting out. So it ends up going up to 65 cents, and then it pulls back again, pretty dramatic. And then it comes back up a sort of final time, hits a high of 92 cents, is not able to break over $1 a share, and then begins the drop back down with a couple of sort of nasty flushes. At this point, it's already nearly 50% off its high. It's over. It's coming back down. For active traders, this did present an opportunity. However, for me, I didn't feel that the profit potential justified the risk, even though it went up from when I first saw it. Well, when I first saw it here, it was already up about 150%. So even though it did go from 30 cents all the way up to $1, nearly, I still didn't feel like I could manage risk on any individual setup. the best thing I could have done is bought it and then, fallen asleep in my computer for 2 hours and then woken up and pressed the sell button when it was at 92 cents. But, active traders are moving in and out. So we're in it here, and then we don't want to be in here. And then we're back in here, and then we don't want to be in it here. And then we're back in, and then we're back out. And then we're back in, and then we're back out. It's very rare for an active day trader to buy and then not sell until, way up here. That's just not the way we're programmed. And the reason we're not programmed like that is because we have seen enough times where we buy a stock and we think it looks good. There's even news out on it. And it squeezes, let's just say, for instance, from $3.20 all the way up to $4.40 and then comes all the way back down. And you're like, you know what? This is why I have to take my profit off the table. So for those of you who have been tuning in, you know that today is day 3 of Trader Rehab for me. So this morning I came over, I checked my scanners on my phone at about 6:30, maybe 6:45. And these are the scanners that I use. These are offered at Warrior Trading. By the way, we've got our St. Patty's Day sale going on right now at Warrior Trading, which you guys could check out. Come over to the website. So some special savings on the software that I use, which is called Day Trade Dash, and also some special savings on memberships at Warrior Trading, Warrior Starter and Warrior Pro. All right, so anyways, so I use my scanners here, and what I saw this morning was that, it was 6:30, so Verb hadn't popped up yet, and neither had Age, which has no volume, so you could sort of disregard this one. So when I first looked at my scanner, the leading gapper was GERN, G-E-R-N. And the first thing I noticed about it was the float of 500 million shares. And I thought, with a 500 million share float, this stock isn't going anywhere. I don't even need to pull up the chart because I know it's not interesting to me. CLDX was the next leading gapper. This one, it's got a 30 million share float. Now, GTAI has a lower float, but it's also a little on the cheaper side. What I have found is that where I make the most money is on stocks between 5 and 10. And this will be, 0 to 20, and then this will be above 20. So I don't trade anything, of course, at 0. The penny stocks, I don't trade much. And this is sort of what my profit curve looks like. So I make the most money in this range. It doesn't mean I don't make money out here. GameStop was obviously out here, and I made a lot of money on that. And there are some lower ones that I'll trade, but I don't usually trade them that often because I know it's not where I make the most money. So when I'm thinking about my time, I'm thinking about ROI. I want to get the highest return on my time possible. In other words, I want to make the most money during the time I'm sitting down at the computer. I'm not just interested in sitting here and just staring at the computer. I want to actually make money. So I need to look for stocks that I think I have a high likelihood of getting those nice trades on. So because I had 2 red days at the beginning of the week, my focus for this week shifted from just, making as much as I could to making sure I didn't have any more losses that were as big as Monday and Tuesday, so that I was managing my risk and that I was recouping perhaps some of the losses from those days, which I was able to do quite well. So when I sat down this morning, or when I first looked at the scans, I saw there was nothing of interest. And I said, well, I'm just going to disregard this. We've got nothing here that looks good. So then I switched gears and said I wouldn't be coming in for another half hour. So I end up showing up a little after 7, sit down. By 7:30, I'm watching to see if we have news, because most PR firms who are distributing news for these stocks put out news at 7 a.m., 7:30, 8 a.m., 8:30, and 9 a.m. They want active traders to see the headlines. They're not going to put out headlines at 2:30 in the morning. No one's going to see it. They want people to see their good news. Now, they might put out bad news in the middle of the night just to bury it and hope it gets ignored. But good news is going to come out typically in this cadence. So I usually like to be watching my scans around 7:30, 7:30, 8, 8:30, 9 to see what stocks are hitting the scans. So I had set my intention that I was going to be patient and wait for something that popped up on my scans. And in fact, the first stock that popped up on my scans that looked good and had news was at 8:30, and it was Lmfa. This stock pops up right here. It pulls back, and as volume starts to come in right here, I bought on this candle. Now, I took a starter of 2,000 shares at $3.40, maybe a little higher, $3.50, something like that. It starts to pull away, and I'm like, this is great. I add at $4.13 here, and I add again at $4.17 here because I only had a starter, and I thought that this is the type of stock that could go up to 5, maybe 550, and then we would have the first pullback, and I'd be looking for a move higher off of there. So if that had happened, I would have been taking profit up here and locking up probably $5,000 in one trade. So what ended up happening was I sized up from 2,000 to 3,000, 4,000 shares, probably something like that, maybe 5,000. And then it drops here back down to 374, no big deal, but it doesn't make a new high on this candle. Now I did add a little high and it pulled back a little sooner than I thought. I thought it would go higher. But since it didn't make a new high right here, but instead made a new low, I had to cut my position and sell. So I sold. And in this case, I locked up $1,266.12. That's not a big position. It's a little disappointing because this, for a moment, I was up, well, it's nearly $1 a share from my first entry at 350 all the way up to 440. And it was looking really good. But unfortunately, for whatever reason, this stock reversed and came back down. And it's important to take your profit off the table before it goes red. So on this one, I booked a small profit, but nothing particularly exciting. The next stock I had on watch was Aisp. Now, Aisp was already on watch because it's been on my continuation scanner. This continuation scanner is looking for stocks that have made a big move in the last 2 weeks. This stock has a 600% range in the last 2 weeks. It's definitely made a huge move. And so I thought, all right, this is one that I want to keep an eye on. Now, this one has continued higher. However, it was not super easy to trade, which is a little disappointing. Okay, so on this one, it has fresh news that comes out at 8:30, bottom of the hour. I had just taken the trade on Lmfa, which gave me a little cushion, but not a big one. This pops up here to a high of 1020. It dips down right here, and I actually got a fill at $9 and let's see, 96 cents. And I bought 2,000 shares of this stock. Now, this is a more expensive stock, but 2,000 shares for me, whether it's a $5 stock or a $10 stock, I'm still managing risk roughly of about 50 cents a share because I know that's usually where I can stop out for a loss. So I'm risking $1,000 essentially. Now, this ends up squeezing up to 1050. And so, of course, I added at 1050. It goes up to 11. It hits a high of 11, and I actually added for the break and the move higher. Well, this one didn't work either, and I ended up stopping out as it came back down. I locked up $663, but I felt a little bit disappointed. I was like, man, that's 2 in a row. Gosh. So 2 in a row. Now, this one did come back up higher as the day went on, but at that point, I just said, you know what? It is Friday. I'm not at my daily goal of $5,000, but $1,929.50 is not bad for day 3 of Trader Rehab. And if I walk away right now, I would say this would be a pretty good day. So that's what I decided to do. I walked away right here. I didn't overstay my welcome. And although it seems that, there were a couple of stocks that moved later in the day, I came in, I traded for a couple hours, I made a little bit of money, and I'm going to walk away and live to trade another day. So I showed you a moment before, at least I think I had this up, my equity curve here for the last 30 days. All right, so for the last 30 days, up about $163,000, which is great, but then had 2 red days in a row. All right, I flew a little too close to the sun. Look, this happens. You got to take some risk to make money. And anyways, pushed it a little too hard. So I had a little bit of a drawdown here. Now I've bounced back up. I had a nice recovery day on Wednesday of 8,000 and a nice day yesterday of 4,300. So about $12,000 in 2 days. Today's another 2,000, so that's $14,000. So now I'm going to be up to about here. I had said that after this loss, I would be implementing some rules that I called Trader Rehab. So my rules of Trader Rehab, let's see, where's my slide on it? Is it in here? I think it is. Let's see, this is this one, biggest loss of the year. Yeah, so here's Trader Rehab. All right, so for Trader Rehab, I created a 6-step process of the rules I would follow. Step 1, acknowledge I'm in a heightened emotional state. Step 2, apply restrictions on my account. I did that by putting a cap on my account of 6,000 shares. So the most I've been able to trade for the last, I'd started with 5,000 shares on Wednesday, and then I increased it to 6,000 shares yesterday, and I kept it at 6,000 again here for day 3, day 2, and day 1. So by Monday, I could increase, to 7,000 or higher. What I had said, however, was that I need to practice mindfulness and meditation to reconnect with discipline. I need to be disciplined. The problem, what got me into trouble on this day here was I was breaking a green streak that had gone from 2, 4, 6, 8, 10, 12, 14, 16, 18, 20, 22, 23 green days in a row. That's awesome. That's fantastic. I didn't want to break the streak. I wanted to keep it going. Big mistake, right? I was only down $900. I should have just walked away down 900. Instead, I broke the streak. And then once I took that big of a loss of 10,000, I came in the next day swinging hard and lost on my first trade, down almost 20 grand. So, all right, I had a setback. Had to stop the bleeding. And I said, until I've made back about half the loss, I'm going to keep the training wheels on. Once I've recouped about half the loss, I'll take the training wheels off and start to scale up. The reason I'm doing that is because I don't want to have one of these happen, where I come in Monday morning with 20,000 share full position and I get wrecked. So I need to kind of ease back in, get my confidence back, get the account back up, and then start to scale up. Because the market today was slower, I don't really see, based on current market conditions, that there is any good reason as of right now for me to take bigger size today or bigger size on Monday. However, by Monday morning, I could be sitting down and we could see a stock potentially that's up, 150%, 200%. And I could think, you know what? I'm going to step up to the plate on this thing. This looks good. And as long as I can first start the day by building a cushion, I build a cushion by taking the first trade with, let's say, 5,000 shares and a, 25-cent stop, or 2,000 shares and approximately a 50-cent stop, risking roughly, $1,000 to $1,200 on the first trade. If I can do that, and then on that first trade, get myself up 1,000 on the day, right? Now I've built my cushion. From there, I could start to increase up to 6,000, 7,000, 10,000 shares, and so on and so forth, as I make my way up towards 3, 4, 5, 6,000 on the day. But at a certain point, I also have to scale my share size back down so I can avoid not giving back all the profits I've made on that final trade of the day. You don't want to just go bigger, 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 bigger until you have a loss, because then that loss will be bigger than, probably any of the winners. So my goal Monday is going to be to sit down and hope that we have a nice looking scan. All I can do is hope, because I have no control over what stocks are on the scans, right? I mean, there'll either be good stocks on there or there won't. And so that is sort of the degree of trading that is a little bit luck of the draw. It's the company that puts out news on Monday, and hopefully it's the right combination. If there is, I might get some really nice trades on Monday, but if not, that's fine too. I'll just focus on base hits as I did today and continue grinding away. A few more days like today, and I will be back up a little higher. And the next thing you know, I'm back at the highs and looking for things to pick up. If the thing for me is that it's so classic that when the market starts to slow down, I'll sometimes just push it a little too hard and then get burned right at the end. And then it's hard to recover in a meaningful way when the market's slow. So now you have to be very patient and just sit with being sort of, in the red versus your highs until the market's ready for that next leg up. Patience is where it's at. So I hope you guys found this episode helpful. If you did, I hope you hit the thumbs up. I hope you subscribe to the channel, and I'll put a link here to an episode that YouTube thinks you're going to love. And I'll remind you, as always, that trading is risky. My results aren't typical, so manage your risk and take it slow. I'll see you back here live streaming for Warrior Pro members on Monday morning.